There's enough empty homes for 90 million people. We're talking about the whole population of Germany and Denmark. Hi guys, it's Eric from Hong Kong based in Germany. I've been investing since I was 17 years old for almost 20 years. I want to give you guys alternative perspective about investments related to Asia. Last time I talked about why Evergrande is not going to create the Lehman Brothers moment. However, it will create spotlight on the real estate industry in China, which could create a global economic crisis. Or would it be? If you have not watched the video about Evergrande, click the link above or in the description below so that you can have the background. So, what's actually happening with Evergrande and other real estate companies in China? Last year, the Chinese government issued the 3 red lines, basically stopped these companies from rapidly expanding through using borrowed money. What's the rationale behind this? It is twofold. First of all, to protect the banking system in China. 41% of all loans lent out were related directly or indirectly to real estate projects. This is a very high concentration of risk. The second point is about social stability. Imagine in the biggest cities in China like Shanghai, Beijing, or Shenzhen, you need to spend on average 40 to 50 years of your salary without eating, without spending anything, nothing, just to buy a flat. This is totally not healthy. Even more interestingly is that 87% of the homes sold in 2018 were either second homes or even third homes. Imagine most of them would be empty and just for speculation. And the empty homes in China is enough to house 90 million people. We are talking about the whole population of Germany plus Denmark. The government action to tackle the speculation and bubbles would hopefully protect the banking system and to make housing more affordable in the longer term. Okay, so why are the Chinese so obsessed with investing in properties in the first place? The first reason is social. There are 34 million more men than women in China, which means that having a property is the minimum entry ticket in order to get married. That explains the reason why parents and grandparents would do whatever means they can to borrow money in order to help with the down payment for their grandson or son. The second reason is that there are not many alternatives. Bond, the yield is low. Going to the stock market is famous for being volatile. It's like going to the casino. There are not many other products because there's capital control in place. The maximum you can move outside of the country is $50,000 per year. Of course, the rich people, they have other methods, but in general, normal people, they don't have many alternatives. Property prices has risen since 1979 with only 1 or 2 exceptions. Basically, imagine you have a mortgage and then you will earn a lot of money. Because why? The flat costs $1 million. You borrow $700,000 and pay $300,000 down payment yourself. After 5 years, it would probably go up to $2 million, which is quite normal. You repay the $700,000 that you borrowed, you still have $1.3 million left. Given that you originally only invest $300,000 of down payment, you earn 430%. So there's little surprise that everyone in China flock to invest in properties. Okay then, but at the very beginning of the video I mentioned that the property prices might go down, right? What are the implications to you and I? You need to know that real estate industry accounts for 29% directly or indirectly to the GDP of China. And China's GDP growth contributes to 28% of the GDP growth worldwide. That's a very big proportion. So imagine that no matter whether the bubble bursts or it was burst by the government in a controlled manner, the pace of growth of the GDP because of real estate would not be as high as before. Okay then, can we compensate it with other parts of the economy? For example, exports. At the moment, many factories are moving from China to Cambodia, Bangladesh, etc. because they are cheaper to produce. Unless China can move up the value chain very quickly, export is not going to increase anytime soon. It's also not going to grow so fast like before because you already built all the bridges and roads and railways. I mean, railways they're still building, but more or less, since 1979. Whatever you want to build, most of them are being built, so the growth would not be as fast as before as well. So what is left is household consumption. Basically, it's like whether you're buying an iPhone or a new car. In China at the moment, it's only 39% of the GDP, compared with roughly 60% in the Western world. This is exactly the focus of Chinese government as well, but you're not going to change the culture overnight. For example, the home ownership rate in China is 90%, compared with roughly 60% in the developed world. So the culture is still very different and is not going to change anytime soon. Conclusion is that with the slowing real estate sector, the GDP in China would grow slower. So would be the global economy until there's another economy or economies that could fill in the gap. For example, India, but this is not going to happen anytime soon. With a slowing economy doesn't mean that there will be a financial crisis, as long as the Chinese government manages well. For example, the expectation of the people. They can even control the price so that it will not plummet. They can set a price range for the housing, and maybe there won't be too much transaction at the beginning. People would wait and see, and then they would accept it gradually going down. So that's not a problem, right? As long as people have confidence in the government, which the Chinese government has very good control of the narratives on the media, so it should be manageable. But the other risk is more concerning. But before we go to that, if you're new to this topic, remember to go to my channel, the link above or in the description, to check out my other videos so that you have some background. Even better if you subscribe and click the bell button next to the subscribe button so that you're not going to miss out. The main risk of concern is local government debts. At the moment, roughly 1/3 of the budget of local governments are covered by land sales. But what if there's no land sales? That's exactly the problem. In September 2021, 90% less land sales compared with 2020. So of course, local government will struggle to pay the bills. And even more concerning is that local governments borrow a lot of money. We're talking about $8.4 trillion. Yes, trillion. This equals to more than half of 1 year GDP in China. And 80% of this kind of loans come from commercial bank. So imagine now, 33% of the income of local governments are gone. What would that happen to the banking system in China? The Chinese government is already addressing these issues, similar to what they did to real estate companies, asking them to lower the debt levels. They also asked the local government to lower the debt levels. So as long as the government still asks the banks to lend money to them, there would not be a Lehman Brothers moment. But of course, then we need to be more careful if we want to invest in Chinese banks, because the profitability might be affected. In summary, no matter the real estate bubble in China being burst in a controlled manner or in an uncontrolled manner, the GDP of China and the world will grow slower. This would have big impact around the world, for example to Volkswagen, Mercedes or Apple, so we need to be prepared. Local government's reliance on land sales and the relatively high debt level could potentially lead to bad loans or lower profitability for Chinese banks, so we need to be extra vigilant when we invest. Do you think that the real estate bubble in China would trigger a global economic crisis? Leave me a comment below. If you liked the video, remember to like, share and subscribe. Even better, clicking the bell button next to the subscribe button so that you're not going to miss out. It will be great motivation for me to continue making videos for you guys.